The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, noon till 1 p.m. each market day. And thank you to our hosts, great programming. And let's see, the Dow's up 34 at 795, sorry. The S&P's up 1.5 at 2546. The comp index is up, it's down 9 at 8,570. That's interesting. And you've got the VIX index up a little, up 18 cents at 10.50. And most importantly, you've got this E-mini trading just up a quarter, 0.25, up 0.50 now. In leg, I'm calling this leg F for now. The high, all-time high was 255.325 today. Let me just double check on that. 2553.25 all-time high. We've got the leg with a potential doji. We're just beginning the week, so we don't already talk about the candle. But we've got the weekly chart, leg E, way over the resistance. MACD's good stochastics at 95%. And the 120-minute chart had a sudden spiral to the upside. I'm calling it a G/B and a B- failure if it pulls back. But most importantly, what we're looking at is it spiked over 2550.75. That was the high of the 5th of October. That dropped to 2539 and then rallied this morning to that 2553.25 area, and now it's pulling back. Now, market-wise, we've still got that core position, small position, long in the Dow. We did start a short position. It got taken out by a few cents this morning. I'm not happy. I would have raised the stop because I think that up in the 22,800 area, I feel very confident that if one was short, you would be able to get your money back no matter what happened over the next few days. But most importantly, there's always another time to get back in. I just didn't want to have any risk whatsoever to the upside because I'll explain why. If you look at the QQQ series, this candle, which is now very red, was bumping in an alternate count E/C in the inside track repellent zone. It made a new all-time high today. That's the QQQ power shares. It went to a leg F and now is reversed. But most importantly, what I was really looking at was there was some internal strength in the QQQ series. There was some internal strength at the time in the SMHs, that's the Semiconductor Market Vector Semiconductor Index. And that went to a new all-time high at 96.47, trading now just 20 cents lower than that. 47? Yes. 20 cents lower than that. And most importantly about this whole thing is that in this rotation through sectors that I've been discussing for months and months, what we have is that the IBB, which had shown some strength to go to a new recovery high, sort of stalled over the last day or two and is down a little bit today, down 136 at 338.12. But it's in the same category of rotational aspect where when the market generally starts to pull back, and let's look at the XLF because the bank earnings are coming out this week, holding very nicely up 2 cents at 26.27. So this whole rotation into different sectors, even if you go to a Walmart, I mean, fancy that, Walmart gaps up. It's up 350 at 84.03 in leg D in the daily, leg E in the weekly, and leg D in the monthly. And put that together with what I've been reading and hearing about with Amazon. Amazon's down 10 at 980, down 1.05, while Walmart is up, what was that, 4.33%. So it's really interesting what's going on here. Nothing is becoming sacred. And this is a period, I want to talk about a few things. I wanted just to get it on the record. I think I started it yesterday, last week. Let me say it right now. This is an era for my subscribers, they'll notice that I haven't been having very many highlights of the socioeconomic aspect, skyscrapers and all that stuff over the last quite a few weeks. In fact, I'd say it's the last 2 months. Why? Because this is what I call the quiet period. It's sort of a quiet period before an expansive move to the upside in prices of real estate and prices of many things, automobiles. I'm not talking about what you buy, regular things. I'm talking about when the wealthy start to special order. That's when you start seeing, that's when I've been talking about that. At some point, we're going to get the price of a house, which was the equivalent just a few years ago of the price of a huge, I'd even say maybe not a skyscraper, but a huge building. And this is the era that we're going into. So now let me do a couple of things. Within the context of the markets, you've got the S&P pulling back now a little bit, making a new recovery high G/C. I'm not just going with letters here. What I am going with is that the MACD is still very strong and stochastic is still very strong. So it's going to take quite a spill. It's going to take a sudden, I would say a sudden cascade of about 150 Dow points and probably S&P maybe 27 points. And the QQQ needs to pull back. And that's really what we need. And the VIX index, the volatility index, really needs to be screaming to the upside. Now, at this particular point, yes, there's a little bit of a bump up in the VIX at 10.60, up 27 cents. But really, this is just the start of something. So I'm looking at this and I'm saying many of the sectors are becoming extremely overbought on the daily charts, not so much on the weekly charts. Many of if you look at the IWM, that's the Russell 2000. I keep typing in the wrong place, sorry. IWM. And that's at a leg E and probably making a peak E at 150.68 high yesterday, trading at 149.52. So I'm right on the cusp of starting to increase the change from long side to short side. We've had a couple of very small short positions, and that was taken out. Now, what's really interesting, we did start a long today in a stock that was just beaten down for years, and especially over the last year, and especially over the last week. And I just saw something that said Chapman wave, volume, climax, reversal. So we're going to be watching that. So far it's up from our entry point. Day is not only young, the week is young, the month is young. But theoretically, with this particular technique, it should take 28 days before it retests the low that it made yesterday. And that doesn't tell you how high it can go, but it says that 28 days of rallying, it should be in order after such a beaten down move to the downside. We'll see. This is not even the day is young, the hour is young. All right, so now I want to look at the IYT. The IYT is the transports. Nice bounce today, up 1.46 at 178.90. If you look at crude oil, and this is going to be very interesting, crude oil having a huge day, up 1.34 at 50.93, one of the biggest green candles we've had in about 2 weeks. And that essentially says that maybe it's the Iran thing that's going on, but there is a demand right now for crude oil. And we'll look at gold as soon as I get back. We'll look for reversal of trends in the dollar and gold.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. So the 10-minute E-mini chart that you're looking at here went to a peak E in the Chapman Wave, the fifth highest peak. It was D, then an E, and another E, and that was a high that was made at 2553.25. It really took quite a beating. It dropped a few minutes ago. It's down to the 2542 level. 0.75 that is, and now it's trying to find some kind of the technicals are at a low that says now there should be some kind of a balance, maybe make another H. And for my subscribers this morning, I discussed what we're looking at, why we're looking at it, what I expect at 11:10 this morning, and that if it didn't happen, then you've got to be somewhat careful. And so far now I can't remember. 11:10. All right. Well, I added and we are following certain rules that I always give every day in my opening call. Let me just show you something here. Let me just get that. Okay, so gold is rallying. It's up $8 at $12.93. Made a low just the other day on the 6th of October. It went to $12.62. So this is up 30 points. That's a big move. And the reason why I was expecting that gold would have a bounce, although we didn't put in a trade, there was a perfect time for it. I should have done it the same way as when we bought the dollar. It was right the day of the low, and I discussed this. I never put it on, and one of the reasons is if you're looking at the gold, you see that's trough E, and if you look at gold, that is peak E, and they've come down. And my thinking was that the weekly chart, technically for the dollar, had improved enough for me to say that maybe there could be a pullback shorter term, maybe 3 to 5 sessions. But if the dollar at any point breaks into the 95.30s, that would be really positive action. And if gold broke any support and it went down to the close underneath the 200 period simple moving average, which is around about 1260, that would be a big negative. So those are the parameters I'm looking at. Let me just give you that figure. Yeah, that's 1260. So that's what I'm looking at. And high-grade copper has really been fantastic. I keep thinking of Dan, who loves the TGB. Copper is up 0.03 at 3.065. Leg D, very good move. Now, can it sustain itself? If copper holds about I don't want to go to 3.009. I want to say if it holds the low of today, 3.0275 in the next 3 days, and actually squeaks, doesn't have to be sharp, but squeaks to new recovery highs, there's a chance that I'm getting a Chapman Wave squash in the stochastic and MACD. And that would be very positive. And that's how you're looking now at the cup formation rather than the arch. And I'd love to discuss this in terms of two patterns. One is a negative pattern, and one is a positive pattern. And sometimes they combine to do a little bit of both. In this particular instance, the cup formation will be really, it'll be active if copper can get to the 3.078 area. So 3.066. Right now, it must hold. It has to rally and climb there. And if that's positive, and if it breaks 3.009, that's negative. Just make it real simple. USD JPY. Look at this. This is the yen, dollar yen peak C. It has all the characteristics of a D, but I'm calling it a C for now. As the USD JPY, the euro. This is the. Where did I type that? This disappeared. EUR/USD, and the euro dollar currency pair has a spike and then starts to fail. And that's based on the weekly chart, which is still quite weak. The weekly chart is quite weak. Okay, so that's that. Looked at copper, looked at, crude oil. I did look at crude oil. No, I just started to look at crude oil. Yes, crude oil at 50.99. If we can get to 51.73, somewhere around there, that's going to suggest that it can retest the recent high, and that high was 52.86 on the 28th of September. If crude oil fails, it'll be underneath 49 by Thursday or Friday of this week. Okay, now I think I've got a bunch of those things. Now, I was asked a question. Let me just do this. The IYT, I think I just did that. Holding well, but it looks like it's a little choppy here. It's the transportation index. The XAL I was asked about, XAL, which is the airline ARCA index. That's trading right now at 87.35. There's that A that's pulling back. So it's just a sideways action and reaction in the weekly and the monthly. The daily says a lot. If it can break above 89.90, that's very, very good action. And if it breaks down, say 87.35 right now, down 31 cents. If it closes under 86, be careful. It's making the H pattern for retest of the lows. So I think I've covered. I think I've covered a lot of what I wanted to do. Now I've got some questions here. Apple. Now I have to tell you, Paul, you identified Intel earlier. I said Intel I thought would work really well later on. This was already 6 weeks ago. In fact, Intel's been doing beautifully. Here we go. Here we are, the two fighting patterns in Apple. And Apple has bounced nicely, but I think you're right. I think Apple looks like it wants to go lower down. I do have it in leg C in the monthly, but you know what? It can pull back and still climb to a D later on. So I'm in agreement with you. I think that Apple is having a tough time, a really tough time, potential head and shoulders, kind of a head and shoulders in the weekly, most importantly at 155.64, a break above 158.32. I have to admit that's much stronger than I thought, and that's going to be quite bullish. And a break under at 155 right now, a break under close under 152 is very negative. Next question is, I just did Walmart. Costco, COST. Costco made a peak D and has plummeted to the downside. Wow, look at that. Yeah, gaps down, 2 days, makes a peak C, holds for 2 days, then kaplop. I don't see anything in Costco. I think it's having a real tough time. And the RTH index, which is the retail index, had that W formation. And I think the difference with this W formation and other W formations is that the right side was lower than the left. And that suggests sometimes that there's going to be a strong resistance at the previous high, which was at 82.54, 27th of July for the Market Vectors Retail ETF. And what does it do? It goes to 82.73, fails to make a new recovery high, and then starts to go sideways to down. So this W formation can continue into a W, just a whole series of W formations. Okay, next question was, I had said to Paul that he had also been correct in his Intel suggestion. And yeah, Intel went to a high of peak F on the 6th October 39.89. Pulls back to 39.88, 1 penny, and then goes today to 39.95. So 39.95 says that's a G/C. Wow, isn't that interesting? G/C. And the technicals are just pulling back a little bit, but still very strong in the daily. Weekly is very strong. I like what I'm seeing in Intel, and that's the reason why I have no intention of shorting the SMHs at this time. And that's sort of the clue that I'm looking at to say that the SMHs are telling us that there's some residual strength. And the XLK, which is the the S&P Select, they are spider funding. I said to subscribers this morning, we still have enough indices that are only in C that look like they want to go to D for me to extrapolate from that I want to increase the short position. No, we're actually now only long, and I'll be looking to reestablish shorts very soon, but not yet. I'll be back. Basil Chapman, Dow's at 27.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. This is why we've got so many accurate people listening, and TFN, Tigers, and Denners. Yes, I had the XAU instead of the XAL. The XAU is the Philadelphia Gold and Silver Index, but this is the XAL. Leg E in the, no other way I can count it. Leg E in the weekly, in the daily chart. Leg B in the weekly chart. Made a peak D in a little counter trend rally so far in the monthly chart. So I'm looking at this and I'm saying, hey, A, B, C, D. In the 120-minute chart, but still holding very nicely above the gap. So this is what I'm looking at here. I think we are real close to some kind of a digestive phase. I've been saying that for a while. If you're looking at different stocks, you can see what I mean. But the overall indices are holding very well. And it's the reason why I didn't want to just mess around. I wanted to stay in the tidal move right now, which I still think is up, getting ready for some. I can see the signs of the tide starting to change, but it hasn't changed yet, not at least at the moment. I really do need a close below 22,700 in the Dow to make it quite definitive that we will be going down after that. Most importantly, we're looking at the XAL index, the airline index at 113.33, up 2.14, up 1.92%, as good action, but a little choppy. A little choppy, meaning the MACD's at its highs. Stochastic is lower than it was at the previous peak C high back in the 180s, and now it's at 113s. Hit 114 today. So, and the stochastic is much, not weak, but much weaker than it was. MACD is still good. So I see a divergence in the technicals, and that suggests that the upside could start to get a little, become a little limited. Next question I had was, let me go back to the XAU. The XAU right now, yeah, that's the bounce that we were looking at. And I'm looking to see whether the weekly chart, which is telling me the upside is very limited, downside is also fairly limited. It's just in a trading band. I've been talking about that for a while. I said I expect gold to have a consolidation, but basically be in a trading band with a sine wave move, with the move to the downside and the move to the upside keeps coming back to basically the zero line, which is at about 1,300, 1280 to 1,300, and we'll see what happens. I wanted to do one other thing there. HGX. HGX is the Philadelphia Housing Sector Index, and that has gone to 40, 48. This is in a leg E/C and extended somewhat in the daily, but still strong technicals. And it's almost like a single leg up B. I'm calling it F/B, but I'm calling it really a B in the weekly chart, in the housing sector index, and a leg F/C in the monthly. And look at this monthly. It's incredible. Look at this cup formation. It was in July of 2005 at 293. It plops. It goes down to 54.31, and now it's trading up in the 300s. How about that for a comeback? Took time. 12 years. Okay. Now I want you to do this. Yes, I was asked. Okay, I'll do it. So we've got the we've got my Dow Quartet, and the question was, hey, how's the Dow Quartet indicating what's going on? Well, it's a mixed picture. For instance, GE trading at 2368 had a huge volume day yesterday, like almost a climactic move to the downside. Bounce back up a little bit. It's 2370. We won't know that this is anything more than a bounce unless 2417, the 9-period exponential moving average, is decisively taken out and it pushes to 2435. Weekly chart trough F may be forming if there's an up week next week, and the MACD and stochastic are slowly improving. So that, in a sense, is some kind of support. If you look at IBM, and here again, I've got to give Paul credit. Paul was saying, what about IBM? I said, I can see IBM bouncing, but it's within the context of a horrible monthly chart and a very poor at the time weekly chart. But now the weekly chart is improving. It's in leg B. Not great, but the low that was made at 139.13 back in late August, we're trading at 148. So this is a 10-point move in IBM. This is great, but now it's in a leg F. I could give it an alternate count for the moment, F/C. I just want to be thorough. It's an F/C potential, which says, yeah, you could still have a little bit more to the upside, but be very careful at 148.25, up 86 cents. If IBM closes in the next 3 to 5 sessions below 146, that's going to say, all right, short-term top is in place. We'll see what happens. But that's IBM. So you got GE maybe making some kind of a low that's maybe a tradable low. You got IBM having a tradable low, getting a little bit toppy right now. You got Triple M, which, this is amazing, made an all-time high a few days ago, 217.61. And today's high is a penny lower, so it's making a little mini U-shaped pattern. I'm going to be watching this very closely. And leg C, only a C in the weekly chart, and leg D in the monthly. So you're looking at Triple M holding very well in fact, leading the pack. And if you look at UTX, the fourth one in my Dow Quartet, is having a very good rally. It's in leg F, going to be recycled, calling it an F for now at 118, round number, minus 63 cents, having made a leg F yesterday and possible peak F. If the 118.83, 85, 80, 88 level is not taken out in the next day or so. So this is going to be very interesting. So out of the Dow Quartet, two are acting very well, closer to all-time highs. One is making new lows every single day, not today. It's trying to bounce. That's GE, and IBM has been having this counter trend rally, but a low level, what I call consolidation. You've got a high level consolidation where the rectangle is up at the top, and at the bottom you can make the arch or the cup formation, but it's at the bottom, and this is what's happening. So it's really a mixed picture. Then the next thing you want to look at is XLK, which is the XLK is the S&P Tech Spider Fund in leg C. I'm calling it a C. I could give an alternate candle. I see no reason why. MACD is good, stochastic is good. Leg C in the daily. Leg F, I'm calling it right now, in the weekly, and leg C in the monthly. Still looking out much stronger highs in this year, 2017. What am I missing? I know I'm missing something. I wanted to talk about it today. Yeah, there was this thing about the Nobel Prize winner in economics, Thayer, and he is from Chicago. And one of the things that he wrote about is nudge. I haven't read it, but some of my long-term subscribers will know very well. There was a period, ages ago, where there was program trading, and you would suddenly see, out of the blue, woof, the market would shoot to the upside or shoot to the downside, and then it would be exacerbated by more selling, and people would say, oh, there they go again. I would say there's no they. The real they is that there's a nudge factor. I have no idea if it even coincides with anything that Mr. Nobel Prize winner is talking about. But what I wanted to emphasize was I dealt in the market long enough. I traded options and all sorts of things, futures that work. And my feeling was that there are times where most investors have no clue as to what's going to happen. And that goes for the professionals, although you don't think so. What happens is that the market is just kind of on the cusp of moving higher or moving lower, and there's this indecision, and then suddenly the market moves, say, down, and then the futures kick in, and then all of a sudden it goes down 5 points in the futures, then 10, then 12. Well, that's the nudge factor. Nobody really knew, but they were standing on the platform station, and as the train went this way, they jumped on, went that way. That's all it is. It's the nudge factor. And then somebody says, yes, short. The others say short. And then you get the copycat phenomenon. And that, to me, was always been the nudge factor. So I need to read what Mr. Nobel Prize winner has to say.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. Just real quickly, the S&P is in G/C. A little doji candle, been a high-level consolidation at the top, sort of a distribution stalling process. MACD is strong, but starting to flatten out. Histogram starting to pull back. And the stochastic's at 93%, a little lower than it was before, at 96%. And the on-balance volume has gone A, B, C, D, to a D. So I'm looking at this and I'm saying I think it's getting near to at least a sideways consolidation. As I say, I don't want to. I need a little more confirmation about the Qs and the IWM, etc., that we really have made some kind of a top. There's still residual strength. I wanted to dissipate before I really want to go short. So the answer is yes, I'm calling it G/C, and I'm waiting. I'm using the 120-minute chart, which is, I probably won't be able to do it now. 100, oh, it's A, B, C. This is a D. Okay, so there's an alternate count goes to a D. I'm just watching it closely. I think it's very close to at least a short-term pullback. Been saying that for a little while, but it's all within the context of rotational aspect. Let's go to Ben in Tallahassee. Ben, how are you?
Good, Basil. How are you?
I'm very well, thank you.
Great. So I went short the IBB yesterday, and as a subscriber, I was just curious, especially knowing that we got a monthly, weekly, and daily. I don't know if they're leg Ds or peak Ds, but just curious if I'm missing something on you not wanting to execute a short at this time on the IBB.
So that's a really good question. Now, one of the aspects was in the IBB trading at 338.40. This is the iShares Nasdaq Biotech ETF. I wanted to see there's a pattern that looks like a left shoulder, a head, and then the right shoulder on the right side. And I wanted to see what happened after the 2 doji candles of the Thursday, I think it was, on the 5th. At 341.90 and then 342.50, just slightly higher on the 6th for D. Another doji candle, just a small red candle yesterday and a small red candle today. I'm looking at this and I needed clues from the SMHs, the semiconductor index, the XLK, that's the tech sector, and I needed clues from the QQQs and the IBBs as to what I thought would happen over the coming days. Look, the Dow's just spiked up to plus 51, S&P plus 4. This market, as I said to subscribers this morning, in my Trader's Corner, I said, this so far is not bear market material. We have not got sharp down, almost triple-digit down in the Dow, strong minus 15 to minus 17 in the futures, S&P futures. We haven't got this unified pullback with the VIX index spiking much higher. And bad news, there is no news right now that I perceive at this very moment.
Basil, the question is, I mean, can't you really treat IBB as a separate sector? I mean, it certainly has gone up and down on its own, right?
That's what I've been doing, except for one little thing. The rotational aspect says that every time it's pulled back, and look how it went sideways. Basically, if you think of it this way, it's gone from the end of August until today within a really one of its narrowest sideways trading ranges. It was even narrower before until it broke out. But even then, now, are you correct? Are you incorrect in saying, yes, it's a peak D in the daily, a leg D with a chance of making a peak D in the weekly, and a leg D in the monthly? Those three Ds alone should say, hey, at least you should get some kind of a pullback. But I have to remind you that in that entire move from 336.25 in the IBB, that was the high, let's just call it the high from September the 1st, all those highs. When the market pulled back, IBB didn't pull back very sharply. Yet when the market went higher, it didn't do much until this last move. So it's saying to me that fund managers are still interested in it. I'm going to be looking to short the IBB, and I might do it via, I don't know if you use the BIS, the inverted long short side, or you actually shorted the IBB. But I'm thinking of doing that under certain conditions. But most importantly, look at the way over the last 8 sessions, or 10 sessions, it's held above the 9-period moving average. Now it's starting to touch it. So I'm looking
now,
at it more.
The other negative I thought, isn't there, I forget what time frame, it's either the daily or the weekly, I thought it's still well under the high, right?
Oh, well under the high of 400.79 in the monthly back in July of 2015. Absolutely. And
so would that be, so that would be a gray leg D or peak D in the monthly right now.
So right now it would be yet another D to correspond to the previous D. So what I would do is this. I don't think you're wrong at all. I think if your timing was very good. But you need to see speed. If you don't get the speed in the IBB of the down move, in other words, by tomorrow, 338.52 right now, by tomorrow it should be testing not even 337.25, but 336.61. If it does something like that, you've nailed it perfectly, because that's the best risk reward you could have had in months in going short just the last 2 days. So that's all I'm saying to you is, keep in mind, you've done everything right. There's nothing that you've done wrong. 342.51 starts another move to the upside. And for 4 points, I'd give it those 4 points right now. I would only say to you that if it closes above yesterday's candle of 341.73, it's just an eye blink away to go to the upside.
No, for sure. I appreciate that feedback. Last question is do you still have that longer term target of IBB at a much lower price? I forget what it is, like 220
240 to 220 to 200. I've still got it, because I'm thinking this is 5 in the monthly on the way up, and if this in the monthly, that is in Chapman Wave, and if that starts to pull, I'm going to make it real simple. If the IBB in the month of October starts to trade under 322, I think it's got a much deeper consolidation going on. If I'm wrong and it's just suddenly you're looking at it at 345, it says, you know what? This is the ever-ready bunny. It's back into the portfolio manager's focus. It's going high. That's the way I'm treating it right now in the longer term. Shorter term, I just make it real easy. A close below somewhere around the 336s says, aha, now you've got your D in place. The stochastic MACD is weaker than it was before, even though it's still just at the moment is strong. And stochastic at 85 will probably go down to 79, and then you're on your way.
Okay, perfect. Well, somehow we need to interject some bad news in this crazy market.
No, it's not that. There are lots and lots of bad news, but the market isn't perceiving it yet as bad news. It got immune to it. And if it's immune to it, it's going to take something out of left field, just something no one's even thinking of in the next few days, maybe. But that's the way it's going to have to be.
I agree, and of course, I have a hard time saying that. Nobody, because if it's going to be something substantial, hopefully it's not detrimental to.
Yeah. We don't even want to speculate.
We don't want to go there. With all the craziness overseas right now, we don't want to go there. Basil, thank you very much.
Thank you very much, Ben. Always appreciate it. Ben in Tallahassee, and we're looking at the Dow 45, S&P up 3. This is going to be very interesting. We've got a little break coming up in a few moments. I wanted to talk to you just a little bit about, there are a couple of things, and I'm going to write it down because by the time the break finishes, I'll already have moved on 3 deviations later. So let me just write it down. Clothes. Oh, of course, you've got to find a pencil that works. I haven't got a pencil that works. I do it right here. Clothes. Let's call it fashion and verbiage. There you are. I'll be back. We'll talk a little bit about my bigger socio picture. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So, of course, I forgot about the lightning round. I'd mentioned it then. I'll do that in a second. Look, global shares, timber and forestry, pushed up again today. High grade, no, this is the Philadelphia Housing Index, up again today. Bonds sort of stalled here, down 20 cents. So this is going to be very important. Okay, here we go. First question I had was right over there, HYG. So HYG is one of the junk bonds. This is the iShares, iBox, high yield, core bond, corporate bond. And look, it's sort of stalling here. It's made a peak D in the weekly, and it's only at a peak C in the monthly. But what I really like, keep your eye on this. This is the left side, the daily. In the middle of the weekly, on the right is the monthly. Here we go. Keep your eye. Here it is. Okay, this is the one I like the best because the one I follow the closest. The junk bonds, same sort of thing. Spider, BB Barclays, high yield bond fund. Peak D, same thing. Peak E, then a peak D is stalling. Peak E at the 200-period moving average. Remember, I discussed this about 3 months ago. I said, whoops, it stalled at that 200-period moving average in the weekly. But it went to a peak E in the weekly as it made slightly higher highs, and now it's arching over. So what am I thinking here? I'm thinking, so the question was from Julie. So Julie, what I'm thinking here is that high yields are going to be under a little bit of pressure now. They could pop up a little bit, but my thinking is it's more sideways. It's a 37.21 for the J and K, trading at 37.20, unchanged right now. So 37.30s to the 37.03 to maybe 36.93 area. This is the range. And I don't think it's going to go far. That's why I'm thinking that bonds might bounce, but they are stuck in the range. I've been saying that for a while. Yes, a rally in bonds, but until the TLT, the iShares break under 122, this is just chop, chop, chop. Oh, I didn't even get to that. Let me just do this real quickly. What was the first one that we got there in the... I can't find it. All right, you know what? Tomorrow we'll have a special session. We'll do a lightning round. We'll have a couple of lightning rounds, and that's all I'll focus on. So in the meantime, back to the ranch. Have a great day. Dow's up 45. Still residual strength. It's getting more and more. It's getting harder to go higher. But
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.